Good evening, everyone, and welcome. Thursday came the fireworks. Today, it was the fizzle that followed last week's sizzle. Stocks sold off mildly after last week's pre-4th of July parade to record highs. Yes, the Dow did stay above 17,000 for a second day, and the S&P did remain just a day or two's rally from the 2,000 mark. But this sunny summer day on Wall Street was one for reflection and maybe taking some chips off the board. The Dow lost 44 points to finish at 17,024. The Nasdaq was down 34, its biggest one-day drop in a month. And the S&P 500 slid 7, or about 0.4%. Some now question whether the major averages are just too high and whether today's modest declines could be the start of a pullback that many bearish market watchers have been expecting. Even Nobel Prize-winning economist Joseph Stiglitz expressed discomfort with current sky-high stock levels.
These very strong stock market prices are in a sense a symptom of the weak economy, not a symptom that we're about to have a strong recovery to our real economy.
Stiglitz also pointed to the nation's growing income inequality as another reason for a weak economic recovery.
Well, Byron Wien sees things differently, and he says that the U.S. economy, as well as economies all around the world, are doing well, and that's why he's very bullish on stocks right now. He's vice chairman with Blackstone Advisory Partners. Mr. Wien, so nice to have you on the program again.
Always
it's been a while
be
since we've talked to you. So, so many people came back to work today with second thoughts about investing in stocks, but you're very bullish, and you also say stocks are very cheap right now. Tell us your thinking.
Well, I don't think I said they're cheap. I think they're fairly valued and can go higher. The market is selling at a reasonable multiple, a little bit above the long-term median. Earnings estimates are $115 for the S&P 500, which is the index I watch. And I think earnings could go to 20 times, or the multiple could go to 20, and that would put the market at 2,300. So I think we could reach that sometime this year or early next year.
The first half of the year, Byron, has been pleasant but not blockbuster. Do you think the second half's going to be better?
I do, but the first half, Tyler, wasn't bad.
No.
I mean, for a negative 2.9% first quarter, to have the first half up 7% on the S&P 500, and I think we can do better than that. That would be 15% for the year. That would be terrific after a 16% year and a 29% year.
Mm-hmm. So, Byron, I found that your asset allocation was very intriguing. You said that 45%, I'm going to go through this real quickly, but 45% long equities in the U.S. and non-U.S., 30% in alternatives like hedge funds, private equity, things like that. You have some in gold, some in agricultural commodities, and no treasuries, no traditional corporate bonds, but you are in some very high-yield debt. Tell us quickly what your thinking is here.
Well, I think the equity market is reasonably priced and can go higher. I think the bond market is overpriced, especially quality bonds and treasuries. So I think yields are probably going to rise there, and that would cause a loss in whatever assets you have in quality fixed income. And I think that valuations are going to rise for equities. So I think you can make money in equities and lose money in bonds, and that's why I have a virtually all equity portfolio.
You are a fearless predictor, Byron. Every year you make your 10 predictions, and most of the time 7 or 8 out of 10 come true. What would cause you now to change your rather rosy view of the stock market?
Okay, well, first of all, Tyler, you give me more credit than I deserve. It's usually only 5 or 6 of them that work out. They are surprises, not predictions. And they're events, I think, have a probability of happening, but they're not sure things. I think what would unsettle me is if the geopolitical framework that we're operating in really heated up. I think Iraq is going to be divided into 3 parts. I think Iran is going to move away from its nuclear weapons development program. I don't think China is going to go to war in the South China Sea. I think Putin is going to be patient in Ukraine. And so, that's a pretty sanguine view of the 4 major geopolitical events taking place around the world. If I were dead wrong about that, and one of them erupted into a major conflagration, then I'd have to rethink my optimistic view.
What about, it's very reassuring to hear that those global hotspots, you're not so worried about them. What about here in the U.S.? I mean, there are a lot of people are very skeptical about the U.S. economy. We get some good data, we get some bad data or disappointing data. I mean, what's your view on the economy here?
Well, I think the economy is doing well. You know, almost every parameter I look at, I listen to Joe Stiglitz's comments, you know, but you have bank loans up, you have over $2 trillion worth of deals announced. Both of those indicate business confidence. The purchasing manager indexes are headed higher. Consumer confidence is improving. Vehicle sales are strong. I think capital expenditures are going to improve. So I see a whole panoply of economic indicators that suggest to me that we're going to be headed toward 3% growth. I don't think that that's what we're going to have. I do agree with Joe that the inequality problem is a problem, is serious. I also think that median family income hasn't risen, but I still think the U.S. economy is going to do much better in the second half than it did in the first.
Well, fascinating insights. Thank you so much, Byron. Always a pleasure to have you with us.
Thank you for having me.
Byron Wien, he's with the Blackstone Advisory Partners.